Hi traders, this is Dennis Wilburn, the Autopilot Trader. The market's just about to close. Question for today is, should you be trading stocks or ETFs? Which one would be the best for you? So let's get into our market review, and we'll also take a look at answering that question, which is best, stocks or ETFs? Let's go right now. Okay, well, it looks like the market is going to be closing up towards the highs, if not at the highs. And so let's go ahead and take a look at the charts to see what we can see. Interesting formation. Yesterday, what the heck happened in the markets yesterday? Well, we had this huge sell-off. We had called this to our Autopilot combo members early, over the weekend to say, hey, watch out when price, and there's the bell. We said, watch out when prices get back up into this level of past resistance, because that may be where we reverse. And sure enough, Monday ran up to the downtrend line, reversed down, put in what could be considered a bearish engulfing pattern off of Friday's candlestick. However, as we said and as we talked about with our premium members on our live trading session yesterday, is that a candlestick reversal candle after just a very short trend, like this is a 2-day trend, is not as meaningful as a longer term trend like we see over here, where we had the same type of reversal pattern and it pulled back down. So where might things go? Well, on the S&P, as you see, what are we up against now? We're right up against the 50-day moving average. Do we break out? We'll see. One of the things that is kind of interesting is the TSI has initially started to break out of the trend line, and momentum starting to move back up. Things look really good on the weekly chart also, as we see over here. And so we are basically kind of pushing on our way up. On the weekly chart, we have resistance coming up about the 401 level, which corresponds to just about that, that gap down right there. And remember, anytime you come into gaps, either up and or down, that is levels of either support or resistance. In this case, it would be a level of past resistance. So that's what we've got going on with the S&P. What about the Qs? The Qs, representing the NASDAQ, again, it had already broken out of its downtrend line and was starting to move up, closes above the 50-day moving average today. That is something to keep in mind moving forward. So we have a couple of bullish crosses here. The 8 and 20-day moving average crossed to the bullish direction. We are up above the 34 and the 50. We took out this past high, intraday high here. And so now we have a series of higher lows, higher highs. And so are we on our way back up at least to the 314 level? We'll see. If I'm looking at trading TQQ or on the Qs, I'd be looking at a pullback into the midsection of today's candlestick. If we break out and gap above this, look for a gap and go. And again, we still have a lot of resistance to get through, those overhead resistance that will act as a ceiling. So be on guard and be on the lookout for stalling action. Next, IWM, the Russell. Excellent breakout on the Russell, right up into the downtrend line. So that constitutes a level of resistance. We may or may not be able to get through that. In the past, what's happened, we hit that level of resistance and then reverse down off of that. But this does now provide us a higher low, 2 higher lows, and a higher high. Breakout above the 50-day moving average. So the 50-day and the 34 will now act as our support. The 8 and 20 have almost crossed to the upside. So that's awesome and that's great. We'll see what transpires from there. So the question for today was, well, which is better to trade, stocks and or ETFs? To answer that, I'm going to basically, just a reminder that all the materials we do present are for training purposes. Traders should always pay for trading a new method, part of the risk of their own personal capital. Stocks or ETFs, which is better? Well, it depends. What does it depend on? Several things. One, there are a lot of different ETFs out there. There's thousands of them. So one, find a great ETF, and we do that with our AutoPilot ETF trading service. I focus on 3 index ETFs and 4 sector ETFs that always perform well. They've got a good track record. They are very solid with the amount of liquidity, and they also have great options, even when you jump into the leveraged ETFs. So what does the benefit of trading ETFs do for you over stocks is? Well, one, ETFs do not have earning reports. And so that eliminates some variables that you don't have to worry about. Secondly, we can concentrate primarily on just the technicals. Trade the technicals. Matter of fact, if I were starting to trade all over again, the ETFs were available when I started trading, I would have been, if I would have had the advice, somebody tell me, trade the ETFs, don't worry about anything else, the stocks, it would have been the best advice I would have ever gotten. Why is the rest of that important? Well, one is, the second piece of that is the ETFs have the leveraged ETFs. Those have solid compounding throughout the year. So you can trade them multiple times, get 10, 20, 30% per run. By the end of the year, they compound out to normally at or above 100%. So you can't count on that with stocks because it's kind of an unknown. However, with these ETFs and the leverage ETFs, I'm going to show you a couple of them here shortly. That is, in fact, what you can count on because they've got a great track record showing just that. IWM, here's a great ETF. There's also the ETF is TNA, which is its 3-time leveraged ETF. Another great ETF I like to trade, XBI. Absolutely fantastic. This is the biotech. As you can see here, the biotech today, how much did it move? Well, it moved about 4%. Now you go, that's pretty darn good, Dennis. Well, that is absolutely true. But how did its leveraged ETF do? Oh, about 12%. And what about this last run? How did it do? That's from this low here up to this high here. The total move was 142%. So even if I only picked up half of that or even a third of that, would that compound out pretty well? Sure would. Then I trade the semis. The semis, similar type situation. How is the leverage ETF of the semis done? Well, how did it do? It went from its low here. I'm not going to say I picked up the low. Let's say I picked up this secondary order here. Well, that's 40%. What about the financials? I like to trade the financials. Came down, did a gap and go. And so just from the gap and go, how far did it go? That's 5% on XLF. Well, on FAS, which is its leverage ETF, okay, up 15%, a little bit over 15%. And then oil. This is oil exploration. How well has it done? Absolutely phenomenal. On this move back here from May of this year, oil exploration ran up about 37%, which you go, oh, that's darn good. What about its leverage ETF? Same move, 85%. Absolutely, and so that is an excellent move. Just started a new move here, and it's already gone up about 30%. Looking for a pullback in that particular entity. So as you can see, those are the things that I like to trade. We offer the service, the AutoPilot Trading service, which basically focuses on the ETFs and also top 5 growth stocks every week, where we have typically around 7 setups and trades. I show exactly where I'm entering, where I'm exiting with both either a profit and or a protective stop loss, and then we just let things run from there. That's matter of fact, we just yesterday got into a trade on TQQQ. This is the 3-time leverage of the Qs. We had called it out on Saturday and Sunday and said, hey, if we pull back to the 8-day moving average, we want to be in. And that was at $26 and about 6 cents. And so we were filled on that yesterday, and look what happened. We get a fill, and it ran up today. How much? Almost 10% in one day. We will take out profits at 10%, and then also as we continue to move up from there. And so how far could it run? Well, if we get on to a long term, we could run all the way back up to this level, which is about 159%. We want to be in the way for those larger gains. That's not a guarantee that we're going to get those, but we just want to make sure that we are in the way for them. So that basically covers us for today. And if this is your first time joining us over on the YouTube channel, please do me a favor. There you are. There's the camera. Please do me a favor. Subscribe, leave a comment, tell me what you're trading. And if you like this rally the market's in, just go rally on, baby, rally on. Let us know what you think. Aloha, God bless, and have a great rest of your week. See ya.